Hi guys, Michael here. In this video, I'm going to be going over some alarming new data that says maybe the housing boom is going to be short-lived and there are huge amounts of risks building up in the economy and in the housing market right now. I'm going to go over the proof and the new data that suggests there is trouble coming and you should all be aware and not listen to the propaganda that's out there in the media that's saying that it's going to be boom, boom, boom this year and everything's all going to be sunshine and rainbows, because there still is many parts of the economy and the housing market that is struggling severely. So sit back, relax, and let's get into it. Okay, so first things first, the thing that is alarming me the most, and that is a third of home buyers are 30 days behind on their mortgages, and mortgage arrears and delinquencies are rising rapidly. What you have to know about this recession is it wasn't a normal recession. It was a short, sharp recession and there was lots of stimulus. But now that stimulus is being taken away and we're now starting to see what are the battle scars left over from this lockdown. So a Finder survey says 31% or 899,000 home loans are 30 days late. But even more alarming than that is mortgage stress is rising. That's where most of people's income above 30% goes towards their mortgage, and they are under severe stress. That is also rising as well. Now what this means is while house prices are booming and everything's looking good now, this is a problem that's brewing underneath, and we're not going to see it straight away, but we may start to see it mid to late this year when mortgage holidays come to an end. We've had statements from Commonwealth Bank of Australia that said, hey, they are going to actually ask some customers to sell their home, but you know, they said at least they're selling in a rising market, hopefully in their area. But I'm also going to go over a lot more data that suggests a crash is coming, so don't go anywhere. But before that, let's get into the worst affected areas. So South Australia is the state that has the highest amount of arrears, 41%. Followed by Queensland, which has the second most amount of arrears at 36%. So even though the Queensland housing market is performing strongly at the moment, who knows, there may be some forced sales coming. But that's not all. Commonwealth Bank of Australia says that when the JobKeeper scheme ends this month in March, up to 110,000 jobs are going to be lost. This is absolutely devastating. And so some of those are going to be homeowners, and so they may have to put their properties on the market as a for sale. And even though a lot of people are saying, look, the people on JobKeeper, they're not really going out there buying these $750, $1 million properties, so it's not going to affect the property market. While that may be true in the short term, these are renters, and this is going to affect the property investors in the lower to mid part of the market, and that may cause property investors to potentially have to sell their properties because they're not getting the rental yields or the rental returns they were getting. And what's happening at the moment is it's not the property market as a whole that's booming at the moment. It's the upper end of the market. CoreLogic says the upper 25% of the market is the one that's performing the strongest. And that was a part of the market that went down first during the pandemic. But as it goes down first, it's the first to recover. So don't FOMO in if you're not in one of these, premium $1 million plus suburbs thinking that prices are going to skyrocket, because again, it is mostly the upper end of the market that is booming. Now there may be some outliers. Again, the property market isn't just one market. That's why I always tell you, you need to research your own suburb, because every market and every suburb performs differently. And not only this, but bankruptcies are rising because businesses that were allowed to trade while insolvent before, they're now winding back those laws. So even though a lot of people on JobKeeper may not be property owners, a lot of these small business owners are going to be property owners. And they're saying, the economy is booming, everything's great, everything's rosy. And the reason why they're saying that is because if they just keep on saying that it's booming, eventually everyone's going to think it's a boom. And so then they go out there and they FOMO in, which creates a boom. It's called a self-fulfilling prophecy. But now we are seeing the stimulus withdrawn. We may see some of those small businesses have to sell as well. A Commonwealth Bank report has detailed an expectation that 110,000 jobs are likely to be shed once the WAVE subsidy scheme ends on March 31st. And what this is going to do is cause a domino effect, or what it could do is cause a domino effect, where one person's income is another person's spending. So if these 100,000 people lose their income, they're not going to go and spend at the shops. And if those shops that normally receive that income, they're not going to be able to buy the supplies from the supplier. And it just creates a domino effect. And in the economy, this is called the velocity of money. And now another alarming piece of data to prove that it's not all boom and sunshine and rainbows everywhere. In the Melbourne CBD, rents are lower than they were in 2011. So desperate landlords in Melbourne have slashed their rents by hundreds of dollars a week and about 25% in desperation to get a tenant. SQM research says the average rent for CBD apartments in Melbourne have fallen 34%. And you may think, well, that's just apartments, that's just more property investors and people that migrate over, stay in apartments. It's not going to affect me. But again, this has a domino effect. If apartment prices keep dropping, then those people that may potentially go and buy houses, if prices do get to decent value, because you can get an apartment in Melbourne for around 150K at the moment, even though, you know, these apartments aren't great quality or it might not be the ideal living situation, they may say, look, this is so affordable, I'm just going to go ahead and buy an apartment, and that's going to take away demand eventually from houses, and that will also have a weakening effect on their housing market. And so I'm sure you've seen all of the media and what I've been covering this channel, that house prices are booming, but I'm just going to show you that the housing market isn't just one market, and house prices are still falling in many areas. For example, the best performing housing market up until February 2021, guess is Humpty Doo in Northern Territory. It's up 31.9%. So that's definitely above the average. But for example, in Carlton North, Victoria, prices are down 16%. Canterbury down 14%, Middle Park down 13.5%, Albert Park down 12.8%, Melbourne East down 12.3%, and Hawthorn is down 12%. So this is why I keep saying you have to do your research for the area you want to buy in, because these people that were maybe potentially looking to buy in these areas a year ago, they may have thought, oh, house prices are going to go up, I've got to get in. But these have actually been terribly performing suburbs for the last 12 months. And for those of you that are interested, the best performing suburbs New South Wales was Davistown, up 24.3%, and the best performing in Victoria was St Andrews Beach, up 21.4% according to SQM research. And another thing you have to be aware of, the reason why there's been such a rapid rise in house prices is because there's been a rapid drop in interest rates. But what will happen is eventually the housing market would price in these interest rates. So say, for example, the average interest rate has gone from 3.5% to 2%. That means people can borrow about 10 to 15% more. So once house prices have gone up 10 to 15%, people's borrowing capacity is maxed out, and then the housing market is going to start cool or stagnate. But another huge risk for the housing market that's coming is rising interest rates. The bond market's interest rates have been going up, and that is the markets pricing in or thinking that interest rates will rise before 2023, when the RBA says they're going to lift interest rates, or 2024. Because guess what? The RBA has to pump up the economy right now and pump up the markets because it's so weak. If the RBA says, look, inflation's getting a bit higher, we're probably going to have to lift interest rates, guess what would happen? The stock market would sell off immediately, because the stock market is so liquid, and the stock market always acts or prices in future events before the housing market. And the same thing, like I said, if interest rates drop 1%, house prices can go up 10%. But if interest rates rise 1%, the housing market can drop 10%. So this is just another risk for the housing market that you have to be aware of. And something I'm thinking, and you have to think too, what are they going to do during the next financial crisis? Interest rates are already at zero. They've already printed hundreds of billions of dollars. So if we have another black swan event or another financial crisis, what are they going to do? What I think is this current financial system, or this current fiat currencies, because what you have to understand is every fiat currency created has failed 100%, not 70, 80, 90%, 100% of them have failed. And we can see people are losing faith in the currency. That's why they're plowing into assets like the stock market, real estate, gold, Bitcoin, because they want to preserve their purchasing power. Because central banks around the world are printing money like crazy and devaluing the money, and that's why asset prices have risen. But if another financial crisis comes along in the next year or two, they're not going to have any firepower left unless they go really crazy and go negative 10% interest rates or something crazy like that. But again, people would just lose confidence and the markets would come crashing down. So I don't want to be a doomsdayer, but this is just key information you have to know right now. And I urge all of my fellow Australians to do your research. The media is pumping article after article about boom, 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 FOMO, get in now, auction clearance rates crazy. You know, there's a spectacular event every time an auction's on, the streets are covered in people. And some people, unfortunately, are gonna make some terrible financial decisions and maybe, you know, use credit cards or personal loans for a deposit on a house and leverage to the T. They're saying, oh, the RBA's got our back, they're gonna keep interest rates low forever. But the RBA really isn't in control. Prices and the markets are in control. And if inflation starts getting too hot, they'll have to lift interest rates. And like I said before, there's gonna be lots of jobs lost. Mortgage holidays are coming to an end. The whole country was shut down for a year. How can there not be some battle scars left over? So all I'm urging you is to be aware, understand there definitely are some risks coming later this year. So guys, what do you think about these risks that I brought up? Do you think they are going to materialize? And again, just a disclaimer, these are all risks right now, but who knows, maybe the government will step in and, you know, create $100,000 first home buyer grants. Maybe, you know, they'll let foreign investors come and buy up a property. Maybe they'll have something called Mortgage Keeper. Because like I'm stating with the facts now, things could change. Maybe the government could jump in again to save the housing market. Who knows? What do you think? Let me know down below. And for all my loyal viewers and subscribers still watching, you're awesome. And if you haven't already, please tap that like and subscribe button. I'll keep you up to date on the latest that's happening here in the Australian property market. I'm loving chatting about this with you guys. You guys have some really great insights and I love chatting with you in the comments below, building a great community. And if you haven't, watch some of these other videos that will pop up on the screen now. I'll see you there. Bye for now.